Raghuram Rajan has done it again. The RBI Governor surprised the market and economists alike with a 50 basis point cut in benchmark interest rates. Announcing the third bi-monthly monetary policy review, Rajan denied that the RBI is excessively aggressive and said he is only front-loaded to monetary policy action. Experts say the larger than expected reduction marks the end of the rate cut cycle, especially considering a possible spike in inflation due to the weak monsoon.
Rajan, of course, now says the onus shifts to banks to pass on the benefits of lower rates to their customers, something which Finance Minister Arun Jaitley readily agreed. And banks have started to fall in line. The country's largest bank, SBI, cut its base rate by 40 basis points and others are likely to follow. Rajan may have given more than what the market and the government asked for, but is it enough to kick-start growth? Will it prod Modi and his team to push the reform pedal? And more importantly, will India Inc., which has been clamouring for rate cuts, open its purse strings once again? Answers to all those questions is our big story tonight.
My name is Raghuram Rajan and I do what I do.
Raghuram Rajan has done it again. The RBI Governor surprised one and all by slashing benchmark interest rate by 50 basis points. And even as the market and economists were looking for clues for his over-aggressive stance, Rajan played it down, saying that he has only front-loaded monetary easing.
I don't think we were excessively aggressive. We weren't sort of throwing out a Diwali bone. I think this is more, I shouldn't say bone with Diwali, Diwali present. But really this was about, given the state of the economy, how can we move it forward?
And the good news didn't end there. The RBI today raised the foreign investment cap in government bonds by another 1.2 lakh crore rupees and even allowed FPIs to invest in state government paper for the first time ever.
We have a medium-term framework for foreign portfolio investment in government bonds with a target of allowing FPI ownership of up to 5% by March 2018. We'll also open FPI investment in state government bonds with a target of 2% by March 2018. Now altogether this implies incremental space of about $25 to $30 billion over the next 2.5 years, of which $5 billion will open up immediately over the next 6 months.
Clearly, the focus has shifted to growth this time around, indicating a convergence with the government's pitch for lower interest rates. The RBI has acknowledged the need for growth push by cutting the GDP growth target for the current fiscal to 7.4%. While many believe that the steeper than expected reduction signals the end of the rate cut cycle, Rajan promises to maintain an accommodative policy stance.
The Reserve Bank intends to be accommodative to the extent possible, given its inflation goals, while recognizing that continuing government policy implementation, structural reforms, and corporate actions leading to higher productivity will be the primary impetus for sustainable growth.
Now that Rajan has done his bit, the onus shifts to banks, which have been playing hide and seek when it comes to passing on the benefits of lower rates to their customers. Also, there will be more pressure on the government, which has been blaming high interest rates for the slow pace of recovery. Over to Jaitley and his team. Gopika Gopakumar, ET Now, Mumbai.
Let's take it across to our two special guests joining us on Business Tonight this evening. Sunil Munjal, Joint Managing Director of Hero Motor, to talk about when will this lead to the revival in the investment cycle. And Rajiv Kumar, a noted economist, also joining in on the show to talk about how much more scope there is for further rate cuts. Mr. Munjal, has the RBI action come as a pleasant surprise, or do you believe it's coming a bit too late?
So these are actually two different issues. I'm not sure they're comparable issues. Is it a pleasant surprise? Yes, because most people were expecting a 25 basis point reduction. A 50 basis point reduction is certainly welcome. But the second point is equally true. We could actually, I believe, have reduced these rates a while ago. But even today, I think it's very welcome. And I hope that the banks will actually go out and transmit this reduction quickly to both to industry and to consumers. So the entire system can then start to benefit from this. We can start to use, to increase or improve consumption. We can start to use some of the unutilized capacity that exists right now in industry.
Mr. Kumar, let me bring it to you then. You know, not only has the governor surprised positively, but he's also sort of indicated that from here on, the policy stance will continue to remain accommodative. But how much do you expect rates to come down, say, through the course of this year?
Well, I don't think there will be many more cuts coming from now until March, because I think has said that he's front loading it so that it makes a cumulative impact, and because 50 basis point will make a bigger impact than 225 basis point cuts. But the point that I do want to make is that this rate cut has been delivered because the government and the RBI are working together. And when I say that, I mean that the government had taken some very decisive steps to improve the supply of food products which were in short supply, and therefore prevented the food prices from rising beyond, rising too much beyond a point. And that's given the RBI the confidence to do this rate cut, and for them to say that inflation will undershoot by March 2016 and then be even below 5% in 2016-17. So that's a very good macro picture which has been achieved because the government is doing its bit and the RBI is doing its bit. So if the government goes ahead and does some more structural reforms, then the RBI will surely deliver further cuts, but not any more until March of next year. I'll be very surprised if any more cuts happen before March next year.
Mr. Munjal, so we've seen the governor sort of play his shot. The ball is now in, the court of banks. SBI today has taken the lead. It's cut base rates by something like 40 basis points. But do you believe there's still a lot of scope when it comes to transmission of rates?
I think banks should try and reduce by 50 basis points, since that is the reduction that the RBI has done. And even in the last two times, all of the reduction was not passed on. It is now time that all of this actual reduction gets passed on to consumers, for the entire economy and the system to benefit from this.
Mr. Kumar, do you agree with Mr. Munjal there on the fact that there is far more scope for passing on the rate cut to the end user as well? SBI has cut rates by 40 basis points, but not by 50, which is what the RBI has done. Do you believe there's more scope for transmission of these rate cuts?
Not too much. And I must compliment SBI, and also I think some other banks have done the rate cut as well, and for transmitting it so quickly. And there is not much scope simply because the rate on the government's fixed rate on small savings on the EPFO, etc., is actually quite high. It's more above 8.5%. So the commercial banks can't go below that on their deposit rate, because otherwise they will lose deposits. And once the cost of capital is high because of the deposit rates being higher, they can't cut down their lending rates by very much. But I suppose if the economy did pick up and the bank's own NPAs started becoming better, that situation became better, then there would be some scope for another 20 to 30 basis points of a rate cut going along.
Right. Mr. Munjal, let's talk about the big picture. What does this really do to corporate India? Will it lead to demand revival, you think, or is it just something that will change sentiment and not have much of an impact on ground?
I think it's a very good signal. There are multiple factors involved in consumption, demand and investment. And an indication and a signal like this can actually help in all of them. For individual consumers, the monthly payouts on the EMIs on commitments they have for things they've already bought and borrowed against, whether it's consumer goods, whether it is homes, it will lighten the burden of their monthly budgets, thereby giving them a little bit more freedom of choice. And for industry, if the demand picks up because of this, it will certainly start to signal a positive change towards better productivity, better production, and an economic growth which the country certainly needs right now. At a time when the entire world market seems to have slowed down, we have a unique opportunity right now to pull ahead. And while we don't work in isolation, but we have a large enough market inside India to take some benefit of this.
So, Kumar, to what extent do you believe, this will lead to a revival in the investment cycle? Because a rate cut alone, everyone knows, is not enough really to kickstart things.
The rate cut is a necessary but certainly not a sufficient condition at all for an investment demand, for the growth of the investment demand. It is one of the conditions, but the others are, for example, all the stalled projects in the infrastructure side. The power sector reforms that need to be taken. The resolution of the 3.5 lakh crore of debt outstanding on discoms. The other infrastructure sectors where the projects are stalled. All of those, I think, those are the sufficient conditions for investment demand to pick up, because until that happens, the corporates just are not in a position to borrow more or to invest more, because, as I said earlier, the balance sheets are pretty stressed, and the banks also would not be able to extend credit because of their own because of what they have on their books as stressed assets, which means the non-performing assets plus restructured loans.
All right, gentlemen, both of you, thanks so much for taking time out for us and joining in on this discussion here on Business Tonight.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.